It's Thursday. Let's talk. So, February is fast approaching its end. March is just next week, and that means spring is just a couple of weeks after, which may also mean more people may begin to put their houses on the market to sell. So, home buyers, I hope you're preparing and getting ready to go out and find your new home. Or investors, if you're looking for a new home to add to your portfolio, then the spring is a good time to get that started. Today, we're going to talk about the necessary terms you need to understand during the home buying process. Those terms can be somewhat confusing. And when you're going through the home buying process and you don't understand the terms, it can make it that much more complicated. We want to simplify it as much as possible. I want to be able to help you on your journey. So, today, what we're going to do is we're going to list and define some of the more common terms that you'll use when you're in the home buying process. So, let's get started. The very first term that we're going to discuss is appraisal. An appraisal is a report highlighting the estimated value of the property completed by a qualified third party. Lenders rely on appraisers to validate a home's value and ensure they're not lending more than the home is actually worth. The next term we're going to discuss is closing costs. Closing costs are the fees required to complete the real estate transaction. These fees are paid at closing. Ask your lender for a complete list of closing cost items, including points, taxes, title insurance, and more. And as your realtor, up front, when we've made an offer on a home, I'll certainly give you a pretty close estimate of what those closing costs might be for the area. Our next term is credit score. A credit score is a number ranging from 300 to 850 that's based on an analysis of your credit history. This helps lenders determine the likelihood you will repay future debts. The next term is down payment. Down payments are typically 3.5 to 20% of the purchase price of the home. Some down payments are even 0%. These programs may be available for you, and you should ask your lender for more information about what you actually qualify for. Our next term is mortgage rate. A mortgage rate is the interest rate you pay to borrow money when buying a home. As mortgage rates fluctuate, consult a lender so you know how it can impact your monthly mortgage payment. Our next term is pre-approval letter. A letter from a lender that shows what they're willing to lend you for your home loan is a pre-approval letter. And these are excellent to have. It lets the seller know that you're serious about purchasing their home. This, plus an understanding of your savings account, can help you decide on your target price range. Our next term is inspection contingency. This is a provision in a contract requiring an inspection to be completed. This is an essential step, and it gives you information on the home's conditions and potential repairs. You want to know the condition of a home before you make such a major purchase. Our next term is affordability. This is a measure of whether someone earns enough to qualify for a loan on a typical home based on the most recent price, income, and mortgage rate data. When home prices and mortgage rates are higher, it can impact your affordability. And our last term is equity. Equity is the value of your home above the total amount of liens against your home. Many homeowners are realizing they have more equity than they thought, and they're using it to move. So that may mean more sellers are placing their homes on the market in spring because they've realized the amount of equity. If you're looking to purchase a home this spring, don't go at it alone. I've just given you some very key terms. And now that you know those terms, you may have some additional questions, and I'll be glad to answer those questions for you. As always, talk to Tamara today. And I will see you on the next day of the week that starts with a T.